Good morning, traders. Here's your market update for today. So, starting with the US dollar index, the dollar index hovered near 99 on Tuesday, showing limited direction as investors awaited Fed Chair Jerome Powell's speech later in the day. And traders are rebalancing risk exposure, though the dollar's rebound suggests a shift in sentiment. Treasury Secretary Scott Bessent's remarks eased trade related concerns, slowing the dollar's advance but also keeping pressure on the risk sensitive currencies. And volatility in forex markets could unsettle carry trades as risk appetite stays fragile. Neither the US nor China could sustain prolonged tariffs without economic damage, increasing the risk of sudden currency adjustments, particularly in funding currencies like the Japanese yen and Swiss franc. And earlier this week, Trump's trade rhetoric and thin holiday liquidity pushed the index above 99. And technically, the 14-day RSI remains above 60, showing firm short-term momentum. And initial resistance is at last week's high of 99.56, followed by the key 100 level. And on the downside, support lies at 98.65, 98.24, and the 98 round figure. So moving to WTI spot crude oil. The oil fell over 2% on Tuesday, plunging to 57.7 per barrel, which is a 5-month low after the International Energy Agency projected faster global supply growth. The IEA now expects production to rise by 3 million barrels per day this year, driven by OPEC Plus and robust US and Latin American output, while the demand growth is forecast to slow to 700,000 barrels per day. And inventories in China and the US are already rising. OPEC, however, kept its demand outlook steady at 1.3 million barrels this year and 1.4 million next year, offering some support. Meanwhile, the renewed US China trade tensions and fragile risk sentiment added the selling pressure. And technically, oil remains in a weak rebound phase after finding temporary support near $57. The RSI has improved from 31 to around 38, indicating fading selling pressure. And resistance stands at 60 and 61.48, and the failure to break above $60 could limit the rebound. And support now lies at 56 and 55.14. So next, spot gold. The gold price traded around 41.40 an ounce in early European trading session on Tuesday, after earlier hitting a record high of 41.79. Renewed trade tensions, expectations of US rate cuts, and steady central bank demand continue to lift the gold prices, and now up 56% year to date. And gold has seen sharp intraday pullbacks but continues to rebound quickly, extending its rally for 9 consecutive weeks. Strong ETF inflows and geopolitical uncertainty offer some solid structural support, with analysts now eyeing 5,000 by next year. And technically, gold's trend remained firmly bullish above 4,100. A daily close above this level would signal further momentum towards 4,180 and 4,200. And the 14-day RSI remains above 80, which shows strong but overextended buying. And the support lies at 40.59 and 39.75. So last but not least, the Australian dollar. The Aussie dollar weakened on Tuesday, with Australian dollar little changed after the RBA September meeting minutes. Policymakers noted conditions remain slightly tight but uncertain, with consumption subdued and wage growth slowing. Inflation in housing and services may exceed expectations in quarter three, while the consumer inflation expectations rose to 4.8% in October. Governor Bullock reaffirmed that the service inflation remains persistent despite progress overall. The market sentiment stays cautious. And technically, Australian dollar fell to a near 2-month low at 64.49, trading with a descending channel. The 14-day RSI below 45 signals continued bearish momentum, and support lies at 64.23 and 64.14, followed by 64 cents. And resistance sits at 65 cents and 65.53. A break above that level could lead to a test of the 66 cent psychological level. So that wraps up for today's morning review. Thank you for watching. Stay sharp and trade smart.